Okay, so you've been really digging into all this stuff about the Fed, right? All
Yeah.
this news about interest rates and stuff. And I know it can seem kind of like, well, when the Fed makes a move, everybody kind of has to pay attention
Right.
because it really does affect so much. So we got all your notes and articles here
Awesome.
ready to kind of go through this latest rate cut
Yeah,
and what it means for, well, everybody, really.
absolutely. It's it's a big deal.
It is a big deal.
The Federal Reserve, they set interest rates, and those rates affect so many different parts of the economy.
Yeah, it's kind of like they're the ones controlling the speed of the whole thing, right?
Yeah, exactly. Like the gas pedal or the brake pedal for the economy.
Exactly. And they just hit the brakes again for the second time in a row.
Right.
They cut rates
Yeah.
by another 25 basis points on November 6th and 7th.
Yeah, which a basis point is just, 1/100%, just so everybody knows.
Okay.
So it doesn't sound like a lot, but 25 basis points, it adds up.
Yeah. And it's the second time they've done it. So that's like a
Back to back.
back-to-back cut,
Yeah, exactly.
which is like a pretty big sign that something's going on.
They're definitely sending a signal that things are, maybe not as rosy as they could be.
Okay, so 2 cuts in a row. That seems kind of like, oh, what's happening? Why are they doing that?
Well, I mean, you were looking at all those economic indicators, right?
Right. Yeah.
And remember how manufacturing output has been slowing down?
Right. Yeah. It said like for the 3rd month in a row.
Yeah, for 3 months straight, things have been kind of on the decline there, and that's definitely something they're paying attention to.
Right. Because that could be like a sign that a recession is coming or.
Yeah, it's a potential warning sign.
Yeah.
And then on top of that, there's all this talk about trade wars and, tariffs and that kind of thing.
Oh, yeah. Right. With all the like back and forth between countries.
Exactly. And that can really throw a wrench in the global economy because it creates a lot of uncertainty.
Right. Because if businesses are worried about these trade wars, they might not want to invest or hire new people.
Exactly. They might hold back, and then that slows everything down.
Yeah. That makes sense.
Yeah.
Okay. So it's not like things are terrible right now.
Right.
The economy is still growing.
Yeah, it's still expanding, but it's not growing as fast as it was.
Okay.
And the Fed is trying to be proactive. They're trying to keep things from getting worse.
Right. So it's kind of like a preventative measure.
Yeah, exactly. It's like giving the economy a little boost, hoping to keep things moving in the right direction.
Okay. But doesn't lowering interest rates also like make inflation worse?
That's the classic dilemma, right?
Yeah.
You lower rates to stimulate the economy, but you also risk prices going up faster.
Right.
And we know the Fed really wants to keep inflation around 2%. That's
Right.
kind of their magic number. But you know what's interesting?
Right.
Some economists are starting to say that maybe that 2% target is outdated.
Oh, really?
Yeah, they're arguing that in today's world, maybe a slightly higher inflation rate wouldn't be so bad.
Huh. So like 3% or something.
Yeah, maybe even a little higher. They're saying it could actually be beneficial, especially when growth is slowing down.
Wow. That's a pretty different way of thinking about it.
It is. It's a really interesting debate, and it shows how complex these issues are.
Okay, so it's kind of like they're trying to walk this tightrope between
Right.
keeping the economy going, but not letting prices go crazy.
Exactly. It's a delicate balancing act.
Yeah.
And then you also mentioned the labor market. Remember how it said the labor market is easing?
Yeah.
That basically means job growth is slowing down a little bit,
Okay.
which actually could help with inflation.
Really?
Yeah, because if businesses aren't hiring as much, wages are less likely to increase rapidly.
Oh, that makes sense.
And if wages aren't going up as fast, then prices are less likely to spike.
So it's all connected.
It's all interconnected, yeah.
These trade wars, the manufacturing slow down the labor market.
Right, they're all factors that the Fed is considering when they're making these decisions.
Wow, it's like a giant puzzle.
It is, and they're trying to put all the pieces together to get a clear picture of where the economy is headed.
So what happens next?
Well, everyone's going to be watching the Fed's next meeting in December.
Okay.
Very, very closely to see what they do.
Right, because they can cut rates again.
They could, or they could decide to hold steady and wait to see how things play out.
Man, it's like an economic thriller.
It is.
We're all just waiting to see what happens next.
Right, and the big question for you listening is, how does this all affect your own financial decisions?
Right, like if you're thinking about buying a house or investing in the stock market.
Exactly, or even just saving money.
Right.
These Fed moves could have a real impact on your plans.
Yeah, so if the Fed keeps cutting rates, how would that change what you do with your money?
Right, exactly.
Oh,
It's something to think about.
It's a lot to think about.
It is, but it's important stuff
It is.
because it affects all of us.
It does. All right, well, we'll keep an eye on all of this and see what happens next. Thanks for breaking it all down.
Yeah, no problem. Anytime.
And to everyone listening, be sure to stay tuned because this story's not over yet.
Not even close.
There's a lot more to come.